Good evening, ladies and gentlemen. My name is Lou Harty. Welcome today to a 21st Century Members Update. Today I'm very fortunate and privileged to actually lock down the CEO and founder of 21st Century Education, Mr. Jamie McIntyre. So first let me see if I can get him on the line. Jamie, are you there?
Yeah, hi Lou, I'm here. How are you?
Okay, I'm great, fantastic. So today what we're doing for our members is just a quick update on, a bit about the global economy, what's hot, what's not, what strategies, because as you know, we've got a lot of members and they ask a lot of questions. So it's rare for us to get you, so welcome and thanks. Thanks for today.
No, you're welcome.
So what we're going to discuss, firstly, what we want is your update or what you believe is going on with the economy right now. What do you see happening with our global economy?
Yeah, well, Lou, it's a very, I guess, exciting time or a scary time. It all depends on your attitude and the way that you look as an investor in your psychology. Markets are very volatile. I said some time ago, after 2008 when the credit crisis hit, in a lot of my blog articles, those who follow my blog articles, I've been saying for some time the world will enter back into a double-dip recession. That was my belief, and that looks certainly much more likely now. I think America is, if it's not already in a recession, it's certainly heading that way. So I guess my views on the world economy is that America will go into probably potentially a 10-year recession. It will go into what happened to Japan back in the 90s, and that's what my expectation is. So, and also I think Europe will follow that path. Basically what you've got to understand is what is driving a lot of this is that the baby boomers' peak spending period really occurred in the 90s and the roaring 2000s, we could say, and that's peaked off. So as a result of that, Western society, in particular America, is in a long-term trend downwards as far as consumer spending, and that will affect the economy, and we see that. So no short-term government stimulus, which they tried after 2008, is going to stop that tidal wave that's coming through. So how does that affect Australia? So I also said to people that follow my blog this year and some months back and even recently, I said the US share market will present better buying opportunities, Lou, in the near future. And that was 3 or 4 months ago, and now we've seen since late July, early August, the US stock market has crashed, and as a result of that, there's been much better buying opportunities right now. And my comment, I would say now, people know a lot about the future, I would say there'll be even better buying opportunities in the US stock market for those who are out there doing US share renting or investing in a different strategy in the US market. Doesn't mean to say, well, no, you don't go in and pick up some bargains now. My belief is there'll be even better buying opportunities in the next few months in particular, especially leading into October, which is always a common month on the stock market. So, Lou, the other thing that people might say is, well, Jamie, how do you see the Australian economy going? How are we going to fare? Well, we are very fortunate in Australia. We're one of the few, what you'd probably say, safe havens in the world. You've got to look at the safe havens such as China, places like Indonesia, Brazil, some of the good countries, I guess the emerging countries that are doing quite well. Brazil's done very well. Taiwan will probably do well, the Asian countries, and Australia would certainly be considered the safe haven. It doesn't mean we're not going to have our issues. The Australian stock market, Lou, as you know, follows the US market even when it really shouldn't. Our fundamentals are different. We should be following the Asian stock markets or China. But, there's sentiment from the US which does drag our stock market down, so you have to factor that in, and that's why our stock market has been coming down. So whatever happens in the US seems to correlate to Australia, even though Australian companies will outperform what's going on in the US. So I'll touch on property maybe a little bit later, but that's where I'd see what's happening. We are headed for a recession overseas. That does not mean in Australia they will go into recession. Some parts of the economy are struggling, a two-speed economy. We are still going through a mining boom that present opportunities. But no matter what happens in the world, you can't control that. As an investor, we need to just look at what we control. Is it a crisis or is it an opportunity? In a crisis, the investors such as Warren Buffett, etc., they are happy to take advantage of opportunity. And Warren Buffett's been investing heavily in US real estate. They've been investing heavily in certain stocks in the US stock market because he's a contrarian investor. He's a fundamental investor, and I tend to agree with the investment style of Warren Buffett. I would see myself as a fundamental investor and also a contrarian investor. Does that make sense, Lou?
Yeah, it does. It does. It makes perfect sense. So, what do you think are the best strategies for these current market conditions? What types of strategies would you go for?
Yeah, it's a good question, Lou, and we get, it's a pretty typical question. I did a blog article earlier this year as well, and I talked about the fundamental financial blueprint that we've taught, for the last 12 years since 21st century education was founded, was that you want to basically have a long-term capital growth strategy, which traditionally was Australian real estate. I was taught by my millionaire mentor, buy and hold, property will double every, say 10 years. And that happened for me when I started doing that in buying real estate back in the late 90s. And that worked well. And then what I learned some years later was the concept which I termed share renting, which is, I guess, the way of looking at the stock market of generating a cash flow. And that was very attractive to me because when you're building a property portfolio, it's usually negative geared. You might be growing in equity, but you don't have a lot of cash in the beginning. So combining a long-term strategy, such as real estate, and overlaying that with a shorter-term strategy, which is generating monthly cash flow, say from share renting, and combining those two asset classes, I guess, and two strategies together, was, I guess, a very successful way, and that's worked very well for members that have done that over the years. And I think it's a very smart way of growing your wealth, is using a long-term strategy but also generating some short-term cash, and it goes hand in hand. What I said a few months ago, we need to adjust that financial blueprint slightly because of new market conditions, Lou, what's been happening, etc. And what I said is that what I've done, it's up to individuals what they do, everyone's at a different level of their investing, if you're just starting out or wherever you're at, is that I said I'm no longer bullish on Australian property as much. I believe Australian properties are very expensive. Some would say overvalued, and I'm not as bullish. And therefore, I decided to adjust my strategy and look for other property opportunities outside the typical capital cities in Australia. And also said, well, I've always done share renting predominantly in the beginning on the Australian stock market. I said, well, there's certainly other opportunities in the US stock market as well. So what I did to adjust the strategy, say, okay, well, I'm not as bullish on Australian housing. And what I've been doing for some time, and I've told members about this, and other members have taken advantage of what we call the land strategy, where land tends to appreciate, Lou, as you know, faster than houses. So when the opportunity is not as easy as it used to be in the Australian property market, where anyone could just buy a property and come back 10 years later, it's doubled. I don't think you can do that, Lou, today. You can't just, put a map of Melbourne or map of Brisbane up on the wall, or Sydney or Perth or Adelaide, whatever city you're in, and throw a dart at it in whatever suburb or street that the dart lands on, go and buy a house, and then 10 years later hope it's doubled. I think we've had the best years in Australian property. I'm not saying it won't grow, but I think most people with common sense would be expecting that houses will grow slow in the next few years. So I started looking for other opportunities in the property market where I can get better growth than that. I don't want to sit around and wait for slow growth for the next 2, 3, 5, 10 years in Australian houses. So that's where it led me to the land strategy. Now, those who ever invest in land, usually what the issues are is that you have to have a bigger deposit, as you know, Lou, generally a 30% deposit to buy land.
That's right.
And you have no income. So unless you've got cows on there, like I do on my farm, most land, as you know, it doesn't generate an income. It's also hard to get finance for. So the average person can't say, well, that's great, how do I get into land? So that's where we helped devise a strategy, which I've used successfully to buy, hundreds and hundreds of blocks of land where you don't have to settle for 10 or 12 years. Incredibly difficult to do, but in some cases it's been able to be done, and which is ideal. We just tie up land. We don't have to settle and pay for it for 12 years. We don't even need to worry about bank finance, which means it doesn't matter if you can't get financed right now because you're not going to need it in that example for 10 or 12 years. So that means it's available to more people. Also, it means you don't need finance. You can secure a lot more land. But also it means when we're looking for strategies, people say, what's hot to invest in now? What strategies are we looking for in these uncertain times where you're going to see some pretty extraordinary things happen overseas, I can tell you, in the next 2 months. A lot of people don't realize how close to some European banks are collapsing. And if you thought Lehman Brothers was an issue when it collapsed, Lou, back in 2008, people haven't seen anything of a European bank start collapsing. It will be much bigger than that. I'm not trying to scare people, but you want to prepare. There's a lot of volatility coming in the next few months and the next few years. So what sort of investments can you get into in Australia or anywhere in the world that is going to ride you through these difficult times when, you know, most baby boomers and Australians have lost a fortune in super. They were too weighted in equities in the stock market, I think, in most people's super, and they've suffered a lot of losses as a result of that. They follow the traditional financial planners, invest in managed funds, and buy, hold, and effectively pray, as I would say, Lou, that you have something left for retirement. I mean, people, it's just not working for people. The credit crisis exposed those strategies taught by financial planners or financial salespeople are basically selling an investment to make a commission. It's not smart investing to do that, and unfortunately many Australians went down that path. I'm saying let's be a bit more educated, let's do things differently, let's look at better investment opportunities. So for me, land is a no-brainer. If you can acquire land without having to get financed, without having to settle for years down the track, the longer it takes to settle, the better. Then you get all the upside, Lou, in the capital growth of the strategy without any downside. I mean, in a credit crisis, what sends people broke on the stock market is they get a margin call. You know, they've got too much leverage, as you know, Lou, in the share market, you get a margin call. If you don't stump up the cash, you're out of business. Or in a credit crisis or in a recession, you have too much debt and you can't fund your debt, you go broke. So if you can use a strategy, land as one of the examples that I'd say what's hot right now, where you're not exposed to debt, you know, it doesn't matter what happens the next 10 years in the world, you're not exposed to debt, you're not over-leveraged, you don't have any leverage, but you have control. And that way you're safeguarded from those potential things that can send people broke, and no matter what environment. And we're also likely to get more capital growth on land than you are. So that's why I've been big in land. I've also been big in rural land, but I meant for investing in rural farms for the average 21st century member is not realistic. It's a much more high-level investment. You need a lot of capital. But for just land, for rezoning, for residential, that's a strategy that I liked, and I did endorse that and make that available to some 21st century members. And some were fortunate enough to be able to take advantage of that. Of course, you know, with thousands of members, we can't, you know, be able to get deals for everyone. It's just not physically possible. We do our best.
So
Lou, does that?
Yeah, no, that was good. So I've got a question from a client that's asked. So why would they look at using our wholesale land release? You know, we still have people that go off and try and do it on their own. So what's the advantage of taking, you know, this wholesale land release?
Well, it's up to members. I mean, our job as, you know, educators, 21st century education, our primary goal is educate people about the strategies, you know, so people can go and do it themselves in most cases with the different strategies. Then our goal is also, you know, provide services to our members, so, you know, we can hold their hand, you know, because, you know, let's face it, we're all busy. We can't be financial gurus in every asset class. We can learn as much as we can. We're going to need help. Like, I don't do all the strategies myself. Some I do myself, and some I have services that our members take advantage of as well that do things for me. So the service is there just to, you know, for people that want help and to make it available. Now, in saying that, in the land strategy, it's one of the strategies where it's incredibly sophisticated for someone to go and do it themselves. We can teach people the concept that, you know, in most strategies we can teach people and confident they can go out and do it themselves if they're committed. The land strategy is just, you know, for the average person, you know, you just can't really do it. One, it's very difficult to do, and two, if you're in a position like we are where we can go and say, we'll secure 1,000 or 2,000 blocks of land, obviously we can put leverage on developers. Where if you're just a mum and dad investor, you go up to some of these in developers that are land banking land, and that's how they're making their money. They buy it 10, 20 years in the future, sit there, and they'll eventually develop it, and they'll buy an acre of land or acres of land, and then they'll carve that up into residential blocks. I mean, a lot of wealth is made through that, probably more through that than any other form of property in this country. But if you knock on their door and say, I want to buy 2 blocks of land in outer Melbourne or in a major regional city like a Bendigo or something like that, it's just not going to listen to you. I mean, I've been in meetings with developers when they found out what we wanted to do and say, they basically told us to go jump, when you say, we want to tie up this land for ourselves and also for our investor clients, and so we can sit on it for 5 or 10 years and make all the upside. And they just go, why would we let you do that? That's what we do. We're not going to let you. You can buy it retail if you want down the track. So it's very hard. And the only way we've been able to do it with developers that, have needed cash, so we can give them something else in return where they can sell. In many cases, they've sold blocks to us at a loss, but we give them a lot of cash and funding. Therefore, the rest of their development they'll be able to proceed with. So they'll take a short-term loss or short-term hit on a part of it to achieve the profits they'll make on the rest of their land developments, which they'll sell down the track retail price. So if we can get it at wholesale price and sit there, that's one of the reasons, because it's a very difficult strategy to do by yourself, that one.
And the fact that 21st Century does that for it, like I know for me, I'm a woman of convenience, right? If someone else can do all the hard yards that I actually don't have to do myself, for me personally, that makes it so much easier, and then I can focus on the things that I actually want to do, which is additional strategies, which probably leads me on to the next point. So can our members do more than one strategy, and how would you timeline it, for example?
Yeah, well, no, it's a good question, and it's probably, apart from people, I get asked when I get pulled up in the street, at airports almost daily if I'm out in public, and it's great, people recognise me from reading my book or whatever, and they'll say, oh, great, read your book, I really loved it. And one of the first questions I always ask Lou is, one, the most common question I get from people is, will you be my mentor? But two, apart from that, as far as when we get into the strategies, a common question is, can I do more than one strategy? I guess what we try and do at 21st Century, and those members out there have been to a 4-day, I talk about this, is that really creating, when I first started teaching, I was just teaching the strategies I personally did myself, which was great. But then as the years went on, I realized, what, if I was starting over again, I probably would have done things differently, and I might have done different strategies. So we started to introduce other experts, people who had a PhD in results in other strategies, such as, David, with those who know familiar with David Lawman with the e-minis. I mean, David was a plumber and become a millionaire e-minis trader. I've never done e-minis in my life, but I wouldn't want to teach people e-minis because I have no idea about it. Well, I'm not an expert like yourself or David that make a lot of money from that market. So we brought in people, and we brought in a whole host of strategies. And it's really designed to give people a choice. So I guess the way we look at it, if you go to a smorgasbord or a buffet, are you meant to eat everything on the buffet? Some people say absolutely. The answer really is no, you're not. You should leave some things there. Just take what you want. The idea of a buffet is to give you choices, is to give our investor clients, our 21st Century members, a choice of financial strategies, not to do them all, okay? But leading into answering your question, can you do more than one? Yes, the answer is yes. The financial blueprint we've taught at 21st Century, which we've remembered recently, the idea of a long-term investment strategy like property, buy and hold, overlaid with short-term cash flow strategies, is fundamentally those two things work hand in hand. So some strategies you can do more than one. Sometimes it's a matter of getting started with one and then moving on to the next. So Lou, what you'll notice with some of the strategies we teach at 21st Century is some are what I call set and forget strategies. You set them up and they happen, they don't require your time. For instance, if you were to buy land as an example and secure land, it's a set and forget. You've done that, you'll sit there for the next 6, 7, 10, 12 years and you don't have to put any more time in it, it's working for you. That frees up your time. Maybe say, Lou, if you wanted, someone wanted to do e-minis, well, and then they like staying up late at night working on computers, which I don't, but other people seem to love that, then they could do that, and that becomes another part-time career for them until they become successful and really committed with it, like some of the members have, and it can become a full-time career if that's what they want. So yes, you can do more than one strategy. What we try to do with providing services to our members is that more and more strategies can be set and forget. For instance, I do Justin Beedham strategies in many of his funds that we also recommend to our clients, and that set and forget doesn't require my time. The other thing we've done, obviously, some of the members might know I've been very bullish on the US property market. I'm happy to exit, the Australian market near the top and enter the US property market near the bottom. But a lot of that's now been, over the last 12 months, longer of fine-tuning that. For a lot of members now, US property can be set and forget because they can use the service and they don't have to do anything. The US property division, 20th Century, does all the work for them. So I guess they're fortunate in that sense. You could do that strategy, do other strategies, and you have the time because some of them you don't actually spend any time on. Where the minis or forex trading is more of a career, you have to spend time on them, as you know, Lou, to produce a result. Share renting, as an example, is quite a good set and forget strategy, but you still probably need that 30 minutes a month, an hour a month to do that. Does that help answer your question, Lou?
Yeah, it does. And I remember when I became a member like 4 or 5 years ago, I think that one of the things you told me was to combine a low-risk strategy such as share renting, and that was one of the first ones apart from going through your home study itself, was getting onto a share renting strategy. And then, 6 months later, then I got into the properties and then obviously into the internet marketing side. And from then, over the last few years, obviously it's all rolled into advancing those particular strategies, which has allowed me, the freedom to do pretty much how I wish to live right now. So yeah, that is good. And a lot of people, I know a lot of our members, we meet them at seminars all the time. They've pretty much followed the same blueprint or the same path to, holistic wealth creation that you've done, and, so it's worked really well. So do you want to have a chat more about, let's have a chat about one of your favourite subjects, and Aussie's favourite subjects about the US property, yeah? Are you still there? Jamie McIntyre. So, Jamie, can you still hear me? Okay, at the moment, don't worry folks, we're just waiting for, we've lost a bit of audio. Okay, Jamie. Jamie,
Yeah,
can you hear me?
Now, Lou,
Yeah, we lost a bit of it.
Can you hear me?
Yep. So I just want to talk a little bit about one of our favourite subjects at the moment, which is the US property.
Yeah, sure. I can. For those who've been following my blogs, as I said before, I'm fairly bullish with US property now. I just did a
Okay, we've just lost Jamie again. Let's try and get him back. Sorry about that, folks. There seems to be a bit of internet interference here. Let's just try and get him back. Jamie, can you hear me? So Jamie's going to be talking about the US property, and to find out more about that, you can just go to the 21stcenturyusproperty.com website, which I've got on.
Property. If you can buy it, it's not until you see, Lou, these houses and overseas you start to really believe it. It's true. It's not just some far idea that maybe it's not true. There is US houses that were $250,000 to $300,000, middle class houses, fairly recent new houses. Actually, some of the houses are really nice that you'd live in. Okay, that you can now buy for $60,000, $70,000, $80,000. Some of our 21st Century members have already bought these type of houses, and they rent to middle class tenants. That in Australia, these houses you'd be paying $500,000, $600,000 for in Australian cities, and you won't believe that until you see it. But if you go to the website, at 21st Century, they have some examples, and you can see some of these houses. Now, also in the US property market, there's houses you can buy that are not very nice houses in different areas that are cheaper. It's really up to you with the strategy. I think a lot of concerns people have with buying US property. One, for the average person, if they're not educated, yes, it can be risky. But Lou, as you know, pretty much any investment strategy, if you're not educated, it's risky. If you're educated, you decrease the risk. I guess there's a correlation. I teach this at the seminars, Lou, you want to saw me cover this, is that let's say you're financially literate, like a lot of people in Australia, unfortunately, haven't been given a financial education at school or university. they think they need to win, you say, $2 million in the lotto to retire, because all they know is you put $2 million in the bank, you get 5% interest, you make, what, 100 grand a year, you can retire on that. The more financially educated you get, Lou, the less capital you need to be financially successful. Let me give you an example of this with US property. $500,000 in US property, and you're getting, say, depends where you buy. You can buy in some cities, you get a higher rental return than others, but let's say you get a 15% net rental return. On $500,000, Lou, that is $75,000 a year. You can retire on that, and many Australians would be happy to retire on that. It's a good, start to your retirement income. So by being educated, you only need, say, $500,000 in that example to be able to retire. Being uneducated, Lou, you need an extra $1.5 million. You need $2 million, as an example, to be able to perhaps retire on. So investing in education, although it may seem expensive, it seemed expensive to me when I was starting out, but when in hindsight I realized I would have paid 10 times as much for some of the courses or knowledge that I've learnt by attending seminars overseas 15 years ago and learning a lot of valuable information, because it reduces the amount of capital you need, it reduces the amount of time as well you need. So US property, let's compare it to the Australian property market. $500,000 worth of Australian property, Lou, as you know, you can't retire on. Negative geared, you're paying a lot of stamp duty, you've got to get all this sort of finance, it's hard. And let's face it, it's probably not going very far in the next few years, so you're not going to make a lot of money on that. Unless, of course, you've never bought Australian property. 1 or 2, I always say, is good, because you get tax benefits, negative gearing. Outside of that, I'd be looking for, as I said, land is a great strategy, and also US, I'd be looking at that. Now, of course, you can be lazy, and 21st Century has that service there for our members where you can just pick a property off the website and it can all be done for you. So you don't actually even have to get educated. But if you want to get educated, you can and go and do it yourself, or you can use the services there available. I'm pretty excited, Lou, about the US property market in a few ways. A few new things that we're doing recently. I picked up just recently another 50 condos in the US. And what's exciting about this, Lou, and I've been speaking to my team, and I'm sending some more of them over there to talk to the banks, is this. Let me give you an example of this deal that I did. 47 condos, $1.4 million. I only had, Lou, to acquire this property was put in no more than 5% deposit. What I was able to do, this development had a 50% lend on it. So for 50, in other words, I was able to simply assume the debt at about 6% per annum. 6% to us sounds cheaper than the US. That's you're paying above market rate, but for us, as you know, with 6%, we'd be happy with that. If you're getting 11, 12, 15% net rentals, you're not too much worried about the 6%. So basically, what I'm saying here, there are some deals. I'm going to start teaching this at some upcoming one-day workshops that I'll be speaking at those. There's some in Melbourne, I think September 24th. I think Brisbane's the next day, the 25th. And I think it's on there on the website. People can book in for those. They're free for US members, and they're yes. But we are limiting these to 75, 80 people max, because there's a limit. In any service that we can't help everyone. It's just not enough time, enough volume to be able to help everyone. But so we're keeping those numbers limited. So it's first thing, best dress. But I will teach, apart from you learning about the US property market, we're flying in some US presenters as well, and you'll learn everything pretty much you need to get started. Is the way to be able to do bulk buys. Some people saying, well, it's like me, I don't want to buy one property at a time. I want to build a portfolio up rapidly. So what I started to do was looking at bulk buy deals. So what you can do in the US if you're educated, and which is really exciting, is that you can assume debt. In some cases, developments have debt on them. You simply take over the debt. You don't need finance application. You don't need a finance check. You just simply take over the debt. You just pay the interest, and it's yours. So that meant I could get in with a 50% LVR on this development. But then what I did is, because I've been educated, I know how to do this, I negotiated with the vendor for what's called a promissory note. So Lou, some Australian investors, we might be familiar with promissory notes. In the States, people know what they are. They're very common. Basically, Lou, all it is an IOU. You're basically saying, I owe you the 600,000 or 700,000 on this development. I will pay you off over time, and you can negotiate that. And I was able to do that. So acquired, say, a development for no more than 5% deposit. $1.4 million development, 50 properties in one go, thereabouts. For $60,000, $70,000 outlay. See, most people don't know how to do that because, one, they're not educated, and two, they're not looking for these opportunities. So as an investor, I'm open to possibilities, I'm open-minded, and I do my research. Now, is that saying that it's always rosy, always works perfect in the US? Some of our members would know it doesn't always work perfect. In the beginning, when we're doing, I guess, a trial test with initial members to the US, there were some mistakes made. Some of those mistakes were trying to get property slightly cheaper where you buy it unrenovated and then you pay the renovation cost yourself. Well, that becomes a total nightmare. You're back in Australia trying to run your career, and do the things that you do. You don't want to be on the phone back and forth trying to deal with renovators in the US to fix up your property. Also buying property that's untenanted. There's some errors that can be made, but we've learnt from those experiences and go, you know what, we have a simple rule now. I've made it clear to the team in the US property division is that properties have to be renovated or in a state fit for tenant, and they have to be tenanted because there's a criteria. As me as an investor, and I know my 21st century members that would feel the same way, we don't want the risk and headache of buying a property that's not ready to be tenanted or isn't already tenanted. So we only touch stuff 90% of cases that is already renovated and it's already tenanted, Lucy. It takes out a lot of the issues and a lot of the potential traps that novice investors will get themselves into in the US. Also, we do extreme due diligence on the cities, Lou, and the suburbs that we buy in. We're not going to be telling our clients to go and buy property in Detroit, which so many companies out there are telling, because why? They don't care about the end client. All they care about is charging client $3,000 or $4,000 fee per property, and they don't care what city it is in. That's why you need to be educated so you avoid that sort of thing. You've got to be using a service that you can trust, that will look after your interests, that will educate you so you can do it yourself if you want, or if you don't want to do it, the service is there really to help those who just simply don't want to do it themselves. So that's why I'm bullish on the US, Lou, because some people say, well, Jamie, what if you just said before on this webinar, the US economy is not going to recover for 10 years. It's going to be like a Japanese-style recession. Won't that mean US property is not a good investment? Well, see, here's what a lot of people don't understand. I'm not buying US property for capital growth. If I get capital growth, Lou, it's a bonus. And I know I will in some cases, and I'll tell you why in a moment. But let's assume the US economy does not recover for the next 10 years. You don't need to make capital growth on US properties to make money. If you're getting 12, 15, 18% net rental returns, Lou, as you know, you'd pay off your property in 5 to 7 years. Who cares if it never goes up in value?
Yeah.
People say, what if the US property market crashes? Well, I joke and say, I think it already has. If it's dropped from 300,000 to 60, 70, 80,000, the people that paid 300,000 are the ones that lost. We're buying 60, 70, 80,000. I'm not too worried if it drops 5%. It's minimal. You don't want to wait to the exact bottom. In some areas, the bottom's already been reached. And other areas, you'll be able to get better deals. So we are now trying to do really large bulk deals now with US banks and just assuming debt. So you've got to look at this. Are you happy? See, a lot of people watch the news, Lou, and they hear that the US banks are going broke and there was a credit crisis, but they don't go, hang on, is this an opportunity? Warren Buffett goes, here's an opportunity. I'm going to go in and buy stock and loan money to Goldman Sachs. Or now he's recently done it to the Bank of America. He doesn't just watch the news, he does something about it. He becomes the news, so to speak. I guess you say, Jamie, you're worth $35 billion, you can do that as well. But I want people thinking the same way. So let's just not just hear about US banks, a crisis going broke. Let's say, how do we, as an investor, turn that into opportunity, Lou? And that's what I've been saying to my team. These banks are going through they're taking haircuts. They're just giving away property for ridiculous low prices to get it off their books. Let's exploit that. And I'm sure people listening to this webinar are quite morally comfortable exploiting the banks that have made record profits for decades. Let's get some of that money back. And so you can exploit the US banks right now by buying property ridiculously cheaply off the banks and basically profiting from their losses. I'm sure I don't have any issue with that. I'm sure no one else does. So there is opportunity there. Do we see it as a crisis, the banking crisis, or we see it as opportunity? And the US property is an opportunity to take advantage of that. And that's why I'm doing it. It's up to other people if they want to do it or not. That's really their choice. But what I'm saying, let's be proactive. Let's take advantage of opportunity. That's not like fear stoppers. Let's get educated. The other reason why US property is very good is our dollar. Strong dollar, Lou, as you know, is up to $1.10. It's $1.06, $1.07. We're getting massive discounts because our dollar's so strong. That makes US property worth considering. So I say, yep, I'm bullish on it. Do it correctly. You can make money. Do it by shortcutting and not doing it correctly, like in any strategy. You can stuff it up and you can make mistakes. Or let's accept at times we will make mistakes. Nothing's perfect. Build a bridge, get over it. I've had some mistakes in buying US property. Haven't been happy with it. I spat the dummy. But, you know, let's get on with it. And I've used that as learning experiences to now achieve a lot greater results because you only learn sometimes by getting into action. And of course, we try and minimize the ways to protect our members, but still, we're all investors. You know, you can't say, well, Jamie, is there any way I can invest and not lose money? Absolutely not. I tell people, and you heard me say this, Lou, before, and those who attended my 4 days, if you as an investor can't handle losing money, don't invest.
Yeah.
And if you're not going to invest, you're basically not going to retire because there won't be a pension to retire. So you have to become an investor whether you like or not. So you have to learn to deal with losing. Things will not always go your way. But do we spit the dummy or do we build the bridge, as our teenagers, you know, will tell us, build the bridge and get over it? So we've got to have that mentality in anything we do. Life is not perfect, but despite obstacles, we get around them and we get the result. Even if someone focuses on the result, you'll get the result, okay? And that's what I've been able to do in the US property market. I intend to do it in a lot bigger way. I'm bullish on that. That doesn't mean it's right for everyone else. No, it's up to them. I can only share what I think is good and what's hot right now, and it's up to individuals whether that's something that's going to fit into their personal financial plan.
I think, yeah, it does, Jamie. And I think what gives me personally as a member of 21st Century is comfort that you've bought, one, so many of these bulk deals, like 47 condos already, and that you're putting your money where your mouth is. So, you know, a lot of people are held back, or fear is the barrier, and it actually, when they sit back and, like I read one of your blog articles when you said that, you know, US properties are 30, 40 year low, and as a trader myself, we teach people to buy low and sell high, and this is exactly the same as what's happening in the US. So, you know, we really need to, you know, fear prevents people from moving forward, and if they just stop thinking about it and see it for what it is, that's where there's a massive opportunity for those people who are actually action takers. So they'll benefit from this in the long run, you know.
Yeah, definitely. So, Lou, just on that, I'll touch on that. The other thing that I forgot to tell people, I mean, one thing is buying US property is effectively a forex trade. Even if, you know, property doesn't recover for 10 years. So I'm saying let's look at it as a global marketplace, that the worst case scenario happens in the US is a recession for 10 years. That's probably the worst case scenario. If that happens, if we buy at $1.05, $1.06, $1.10, and our dollar eventually corrects itself to, say, weighted average 75 cents, 80 cents, then you make it up to a 30-odd% gain on your money, even without the property rising in value at all. So that's quite possible. The other thing we often don't consider, Lou, and why people don't get it, is that in the US, even the properties don't recover, they will run out in many of these cities of stock in 2 to 3 years. The US population, is it still growing? The answer is yes, it is. They had an oversupply, but once they get through that oversupply, which in some of these key cities we're investing is about 2 to 3 years away, these properties you can buy at 60, 70, 80,000, some, you know, for 30, 40,000. They are so far below replacement value. I am happy to invest heavily, Lou, as a fundamental investor, and so is Warren Buffett and others, into an asset class that is so below in the share market, Lou, you call it intrinsic value, and you know, which is the true replacement value in, say, the property market. If a house costs $200,000 to build and you can buy it at $70,000, it may never recover back to the $200,000, but when they run out of housing stock, which they will, their construction industry is decimated. They'll never catch up to the new demand in the future, the growing populations. It will take years to catch up. So people will have to start building new houses. So existing houses will be pushed back up towards replacement value. So this will cause a growth in prices, even with a 10-year recession in the US on some quality stock. So even then, that's why I'm much more confident, because I know these things. Therefore, as an investor, being better educated, I can see the fear factors, but I'll still push through as a result of knowing more information than others, I guess.
What people want to hear. So let's, what we're going to do now is, you've got a really great event coming up shortly that we want to tell people about. Let me just get this onto the screen for everybody to see, which is our Financial Education Summit. So do you want to just run through that, Jamie?
Yeah, I'm sure if 21st Century members, having been reading the 10,000 emails that they've probably been sent about this event, or haven't heard yet, yes, it'll be the largest 21st Century event we've ever done, coming up in Melbourne. Sir Richard Branson, some of you know, has been a business mentor of mine for several years. I've had the chance to meet Richard, probably 3 or 4 times over the last 3 or 4 years, and it's been very difficult. He's a very busy person. He's built, over 300 companies in the Virgin Group. Most of us will be familiar with many of the Virgin companies, 8 of them which have become billion-dollar companies. I often say, who would like to have just at least one billion-dollar company, let alone 8 of them? So I'm an extraordinarily successful person, but I think he inspires a lot of entrepreneurs, a lot of people in general, because people have a feel about Sir Richard Branson that he's not, just like entrepreneurs that are just about the money. He's about a greater cause. He's about helping the consumer. He's about making a difference to the world, and people respect that. He's also someone that is a great role model in the sense of making business fun, making work fun, and I think that inspires people, because a lot of people have the idea that your work or business shouldn't be fun and you're going to have fun with the proceeds afterwards, where work is a big part of your life and it should be enjoyed. And one of the things Richard told me is that throw more parties, and I know I do it in my life and I want to do it more, is that you really should celebrate each day and celebrate your team, your family, your friends, and enjoy your life and your career. Most people are too busy, too preoccupied making a living that, as I often say, they forget to live, lose. So I think Richard Branson is a great example of that. He likes to have fun. He likes to build successful. And the other thing I like, why I had a choice of inviting a few different, profile people out to the event from overseas, and I chose Richard ahead of other people I won't mention, because Sir Richard Branson, he doesn't speak for money. He doesn't need the money. The only way to get Richard is, I have to pay a lot of money for him, but it's for his charity. So I know the money goes to Virgin Charity. So it's also, it goes to a good cause as well. So he loans his name and happy to share and help people, and also help, raise money for Virgin Unite, which is Richard's charity organisation. So I really appreciate that as well. But this event, it's a 2-day event, Lou. It's coming up October 21st, 22nd in Melbourne. It's a lot of questions from members. Will it be in Sydney? Will it be in Brisbane? The answer is no. Unfortunately not. It's a one-off event with Sir Richard Branson. If you want a chance to meet Richard, hear him speak, then this is your chance. October 21st, 22nd, Hisense Arena. There'll be over 5,000 people at this event. 2-day event. We're bringing in also other leading name speakers, not just Richard. Tim Ferriss, some of you are familiar with Lou. I'm sure you read the 4-Hour Workweek or the 4-Hour Body, which is now a huge hit. Amazon just bought the rights to Tim's books. Tim is huge. If you haven't read his books, you're really missing out on something. Tim Ferriss, first time he'll be speaking in Australia. We have him at the event. He'll be on stage 2 separate occasions. He'll be speaking twice. We have about 12 other financial educators and entrepreneurs flying in, some from overseas, some from Australia, some you have seen before, many brand new speakers for the very first time in this country. Industry rock stars such as Jeff and Kane will be there. They've got an awesome segment to teach you. These guys are great fun. They know their stuff. Great people as well. Eddie McGuire, who wants to be a millionaire, will be there as well. I mean, he's had an extraordinary business success, not just hosting TVs, but TV shows, but what he's done in business as well. Amongst many other speakers, a few other names that I can't mention right now, we have to keep secret, but people that you really want to learn on, you really need to know what's happening in the world. You want to be at this event. Of course, I'll be speaking as well at the event too. And not only Lou, but I think what we're doing different with this event, Lou, we're just not educating people, 21st century education, that's what we're about. We're also going to be entertaining those that are attending. We've had Havana Brown coming in to perform on the Saturday night. The event's a Friday, Saturday, and the last night Havana Brown will be performing. It'll be like a bit of a concert, so which tends to celebrate, party, network, meet like-minded people with over 5,000 people there. It's also my birthday during the event, so it'll be a bit of an after-party for that as well. Some people might be fortunate enough to be able to come to that. There is 20 lucky people who have the chance to be selected to have dinner with Sir Richard Branson during the event. You have to be selected for that. There is a significant fee for that, but the chance to meet Sir Richard Branson, spend an hour also with him at dinner, and also be invited to the after party and network. It's not just Sir Richard Branson will be there at the dinner. There's other high-profile people that will be in that room, so the networking is invaluable. And that's, I guess, proximity is power. I learned that from Tony Robbins many years ago. He's told me that, Jamie, proximity is power. You really want to put yourself in an environment where you're surrounded by a lot of people that you can learn off or develop contacts and develop relationships. And that's an opportunity for a select few. Outside of that, there is a cocktail party where there's guaranteed photo opportunity. People buy a platinum ticket to meet Richard, guaranteed photo. There's not many of those tickets left because it's obviously limited to a small amount of people, so you get the chance to have a photo and a cocktail party. So grab those tickets. I think it's on the screen now, the different packaging. The tickets start, though, for general admission from $197. So there's no excuse that people can't afford to get a financial education. It's very affordable. And there's a 2-for-1 deal for general admission, but I think that runs out.
Today, I think, isn't it?
I think it runs out today, so the time people listen to this, they'll probably miss the boat for that. But you can still get 2-for-1 for the VIP general tickets or the VIP tickets as well. So, but don't leave it to last minute. This event will sell out. It's very, it's more than 65% full already. So, and people, booking in every day. So, make sure you fly in further around the country. Get your butt to Melbourne. You don't want to miss this event. Not only will you be educated a lot, but you also have a lot of fun. The opportunity to be in a like-minded group of people, network, the opportunities to learn. You'll certainly love it, and I'm looking forward to being there and sharing that event with many awesome Australians and Kiwis and people from around the world that are flying in to be there.
Yeah, well, for $197 and 2 days with all of these people, that's what that's it's a no-brainer for me. So great, you can go to the 21st Century Education website and click on one of the links to get there, or you can just go to financialeducationsummit.com. So you guys can get your tickets there. So, well, Jamie, that's probably about it for us. Is there anything final you'd actually like to add? We want people to.
I think at one point. Lou, what I'll just add quickly, I think we forgot, I was going to cover the point earlier, is the question you asked is like around, with combining strategies. I think one thing that some people make the mistake of, and when I rarely do coaching, but when I do some one-on-one coaching, I pick up this pattern, is if we're going to be doing strategies like E-minis and Forex, which typically are higher risk strategies, you get educated, you can lower the risk, and you're not tending to use a lot of capital, you should combine those strategies like that with a more of a long-term type strategy. So when we talk about financial blueprint, we talk about long-term type strategies like property, which now land, or the US type strategy. Combined, if you're going to be doing E-minis and Forex, you can combine those two together. You should. I don't like people just doing E-minis or just doing a Forex and that's all they're going to do. Those strategies were originally designed to turbocharge, and like what you did, Lou, you started off with share renting, you got into property, you made, become a self-made millionaire in property as a student, and then you did the share renting, you did selling insurance, then you progressed into some trading strategies and also internet marketing. So you build up and progress as an advanced investor to doing the E-minis and Forex. So they're great strategies, but we want to fit them into our overall portfolio. So I want to make sure our 20% Century members are following the financial blueprint, not just doing one strategy, but combining it and making sure they're building their long-term wealth while they're building their short-term cash flows. Does that make sense? Good?
That's perfect sense. So I think, that's all we've pretty much got time for. I think members that are watching this, a lot of them are very happy. They can't wait to see you at our next event, which is, let me just put it back on the main screen. So guys, if you guys want to log into our next events, you can go to 21st Century Education. You can see the website there. It's just taking a little moment to flick across. But if you go to the events calendar on the website, and you can see, let me see there. We can see this. I'm just trying to see what the screen can see. So if you can go to 21st Century Education, click on the events calendar, and guys, you can book into any one of our events from this screen directly. So you can see we've got a lot of intro events, we've got a lot of webinars. As Jamie mentioned, we've got the one-day US property seminars. It's only for a small, unique group of 60, 75 people, so you want to start booking into those because they're filling up pretty fast. And then obviously our Financial Education Summit and our 4-day seminar, which is coming up, the next one in Sydney, where, Jamie, you'll get to see most of our clients there. So
Sounds great. I look forward to seeing everyone, and it's been great chatting to you, Lou.
Okay, thanks again, Jamie. Thanks very much for your time. Now, guys, what I'll just quickly run through while Jamie's now gone is just to show you quickly the details of where you guys can access the online affiliate program. Jamie's mentioned this in the past. You guys can actually promote any one of our programs and receive a commission. So I want you to go to, if you can see that website there, 21st Century Affiliate.com. I'll just make sure that I've got this screen down properly. If you can see that there, 21st Century Affiliate.com. And you'll see that if you are a member of E-minis or Forex or Property Direct, US Property, or just the flagship product, 21st Century Education, we're paying a really amazing commission fee of $600 per sale plus $400 product credit. Now, for those current members that have already purchased this before, that are already an affiliate previously, you will need to rejoin the affiliate program, and you get a unique user ID and link. Then you can start referring people. So it's a good side business. As I said, when I was a member and I was doing some of the other property and trading strategies, internet marketing for me, this is where I started. So it's a good way of generating additional cash from the educational assets of being a member. So if you want any further questions, you can go and visit us at our website. There's our number, 1-800-999-270, or you can shoot us an email at inquiries@21stca.com.au. As I said, log on to our website, familiarise yourself with the content that we have there and all of our events. And both myself and Jamie McIntyre and all of our team wish you success in the future, and we look forward to seeing you at our future events. Thanks again for your participation, and I'll see you soon.